Okay, because I'm feeling generous, I'm gonna go through this one more time. I think I'm gonna try to add a few more details because I feel like my other video didn't really cover some things. But starting from this downtrend, so before the downtrend even started, right? So I'm gonna break this down step by step, right? What do I do? How do I trade this? What do I do, right? Like all that stuff. Starting from right here, if this is the current price of Ethereum, I am not going to be trying to enter long here. It makes no sense. Why does it make no sense? Because, I mean, if you look at the chart itself, from here to here, you have a massive imbalance in price. Okay, that's one reason. Two, when you have a staircase, when the price is making a staircase like this, what it's doing is it's generating liquidity. Okay, these lows right here, these lows are liquidity. Okay, this is a slow grind up, and usually when you have a staircase move like this, it usually suggests that you're actually losing momentum. Okay, so what's happening, the reason why it's losing momentum is because you have these higher highs. So like if you zoom in a little bit, you have these higher highs, higher lows, but the highs are not really that significant. Okay, and if you open up an indicator, let's say an RSI, a stochastic RSI, a MACD, so I'm going to open up an indicator. So like for example right here, I can already see the divergence being formed. Okay, so this is just one indicator. Let's go ahead and open up the MACD. I'm going to show you what that looks like on multiple time frames. So for example right here, the price is, I mean, just look at this, the price is going up, but the MACD is not even bullish. Okay, this is a 1 hour time frame. Now let's look at a 4 hour time frame. The 4 hour time frame is already, one, it's about to cross bearish, it's losing momentum, so you shouldn't be FOMOing here on ETH. Okay, if anyone told you to buy because it's going to go 6,000, they're lying to you and they don't know how to read the chart. All right, if you go on a higher time frame, you go on 12 hour, same thing. It looks like right here you have another divergence. Okay, you have a high, you have almost pretty much a double top on the MACD, and you're also losing momentum. Okay, now let's also look at the stochastic, because you do want to pair up your indicators if you are going to trade with indicators. Okay, so for example right here on the daily chart, it's overbought. The 12 hour overbought, you have a divergence. 4 hour, yeah, it's overbought. The 1 hour time frame right here, it's forming multiple divergence. This is a sign of weakness, it's not showing a sign of strength, and this is showing you that this is just liquidity being generated until they're ready to take everyone out. So this, in this situation, you should automatically steer clear of trying to go long. Okay, so let's say when the price starts to shoot back down. Okay, so before I even go over this, what's really important to use is a Fibonacci retracement. So when the trend is shifting from an uptrend to a downtrend, you want to use a Fibonacci retracement. So anything above 0.5 is going to be considered your premium, and anything below that is going to be considered your discount. So the only time you're going to be using a premium is when you are in a downtrend. Okay, when the trend is making lower lows and lower highs. Okay, the only time you're really going to focus on using discount is when the price is on an uptrend, because think about it like this, right? If the price is on an uptrend, don't you want to buy it at a discount? You don't want to be buying at a premium. So when you have an uptrend, you want to be buying down here at the discount. If you're on a downtrend, you want to be shorting at the premium. Okay, so for example right here, and by the way, the way to use this is you need a confirm high and a confirm low. Okay, so what does that mean? It looks something like this. So the price going down, and it looks something like this, and the price starts reversing. Okay, this is the only scenario where you can actually use the retracement from this high to this low. Why this low and not this one? Because this is the confirmed low where the price actually started to reverse back up. Okay, so in this, for example right here, we have a confirmed low and a confirmed high. Okay, so what we could do is we can use this high and this low, and now we can map out our premium zone. So if, for example, this is a break of structure, right? We've already broken structure. Okay, we're going to be trying to look for shorts. We're not going to be trying to look for longs. We're not going to try to buy the pullback and expect price to go any higher, right? We've already broken structure. We've already formed a lower low, right? So this is going to be our high, and what we're looking for, if we expect price to continue lower in this direction, we want to see this premium get disrespect, or we want to see price respect this premium and actually reject back down, right? So this is our premium. And so when you're trading with the premium, you want to use other confluences. You're not just going to short as soon as you hit the premium, okay? So what you can do on this is drop down to a lower time frame, maybe identify. So like right here, you have a fair value gap right here, and etc. Right? You have some liquidity there, okay? So we're just going to stay to this higher time frame because I'm not focusing on entry models. I'm focusing on how to analyze the market. So in this case, we have a premium. Now in this case, we also want to focus on the RSI. We need some confluence. We need some indicators to help us, you know, to boost our confidence that this is a good short. In this case, the RSI is becoming overbought. Let's go look at 15. The 15 is overbought. So within this area is a good time to go short. Now, listen to me when I say this. If you're going to go short here, your stop loss is going to be above these highs right here, okay? And now if you, so I'll explain order flow a bit more. So if you short here in this premium, which makes sense, overbought premium, and you know, you've already broken structure over here, okay? If this is a high and this is going to be a lower high, so as we know, downtrends are lower highs and lower lows, right? Which means your TP should be below this low right here, okay? So if, how we're going to map this out is, we're obviously going to map this out as liquidity. And in order to get an exact TP, what we can try to do is identify a gap or an order block, okay? Something like this, right? And so when this plays out, we can see that price actually goes to our TP, right? Now, it's oversold again. We are not trying to go short. It makes no sense to go short because it's already oversold. So here you can either close for profit or, you know, make your stop loss a bit higher. So let's assume, so right now, we're going to apply the same thing that we just did here to here. So let's say this is a high and this is a lower high, okay? So I'm going to go ahead and let's see, okay, right here, it looks like we have a confirmed low. So this is a low, this is a lower low, okay? And I already mentioned the RSI was already oversold, okay? So how would we short this? If we're trying to go enter a trade, we're not going to try to go long here. Now you really can, but your TP is going to be very limited to up here. The reason why is because when we zoom out, we've already formed a downtrend, which means we have a bearish order flow. What does that mean? That means sellers are now in control of price. So every time price goes to a fair value gap or a supply zone, the sellers are going to take over and they're going to overpower the buyers, okay? So how would we get a good sell here? We do the same thing we did. We get a confirm high and a confirm low. So here we have confirm high, confirm low. So we can drag this retracement here to right here. And now we just want to short inside our premium, okay? Oops, premium. Now what's nice about this premium is that you also have a fair value gap inside the premium, which makes this even a higher quality, okay? Now if you want to get a specific level, because this is a big range, you can go in a lower time frame. And then you can map out the supply zone, map out the liquidity over here, and the fair value gap. Okay, that's if you want to get a specific zone. But right now I'm not focused on a specific zone. We're focused on just, you know, how do we trade this? So again, let me clarify. Oops. You can go long here, but your TP is going to be very limited. It's not going to go all the way up here. Why? Because you've already broken structure, you formed a lower low, and you formed a lower high, okay? Which means this is now a bearish trend, a bearish order flow. So sellers are going to try to short every chance they get. They're going to try to fill their orders every chance they get, okay? Which means this lower low, assuming this is a confirmed lower low, this is going to be another liquidity level. This is where we expect price. So let's just make this, I actually forgot what happened. But let's make the assumption goes here. If we go short here, so let me do this again. Let's say we go short here, stop loss above the fair value gap. Now, I'm gonna go through it again, but if you go short inside this premium, now the premium is right here, but let's say you short somewhere here. Your take profit is going to be below this liquidity level, this swing low right here. Why? I'll explain. So let's see what actually happens. Okay, the price actually forms a double bottom. Let's see what happens. We haven't even taken out this low, so this is still an open liquidity level. Looks like we're forming demand here. Okay, right here. Here it is. Let me extend this. Okay, right here. The price is now at our premium. Okay. Is it overbought? Yes, it is overbought. I see a triple divergence. This is an instant short. At this point, you're just waiting for the price to break trend. And that looks just like this. Okay, so you can go short here. Why? Premium, overbought, it's about to break trend, and then you have liquidity. And remember, this is a high, lower high, and this right here becomes our next lower high. So if you have a high, lower high, lower high, you have a low, lower low. What does that mean? That means the bigger picture is still bearish, which means we expect price to go lower to form another lower low, right? So how do you even, what's the TP here? So let's get rid of this and let's show you, right? So remember, this premium is acting as our it's acting as our key level, and it's also a fair value gap, right? We just filled this fair value gap perfectly. So if we're gonna go short, remember, you go short somewhere here, stop loss above the fair value gap. If you want flexibility, make it a little higher, but stop loss above the fair value gap. TP below liquidity. Now, the reason why the price will likely gravitate much lower is because right below this liquidity level, this low, you also have a fair value gap. Okay, I'm gonna just put FVG, make it simple. So here you have an FVG, okay, and then not only do you have an FVG, but right next to it you have an order block. Order block fair value gaps, those are magnets to price. Those are also liquid, basically liquidity. Okay. And right below that order block, you also have another gap right here. So this entire area is really area of liquidity. Okay, so if you're gonna take TP, you want to take TP where people are buying because you're trying to short, you're trying to sell. So you're gonna take TP somewhere in this box. Okay, that makes sense. And again, why do I expect price to go here? Because we have a bearish trend, we have a bearish order flow, we're respecting every fair value gap. Now if you go on a 4-hour time frame, this will make even more sense. Right here you have a gap that gets respected, right? Price breaks structure and then fills in this gap, continues in the same direction. This fills in this gap, goes to the premium, and we expect price to continue lower because it's in a downtrend. Okay, so right here, this is demand. This is, these are where a lot of people were buying. Okay, which means if a lot of people are buying here, their stop loss is just right below, slightly at break even, or maybe maybe at a loss. So there's a lot of stop losses here, and right below their stop loss is, well, look at it, it's an area of liquidity where there's an order block, fair value gap, etc. Right? So it makes sense why price would naturally gravitate to that area, because there's a lot of liquidity here. Okay, right here we can see price goes to our area of liquidity, and now it's oversold. Now usually in this scenario we want to take profits. Why do we take profits? The reason why we take profits is, as price was trending down, we can see that the price left a lot of fair value gaps right here. Which, what does that even mean? That means that price can easily in the next few hours come back up here to fill that gap and then come back even lower, right? It could look something like this, like it can do that, or it can even go a little higher and go back down. So in this case, this is a good time to take TP, even if you have price targets all the way down here. Now you could take partials, you can do whatever you want, just try to secure some profits. Okay, so in this case it's oversold. You're not really trying to enter long. Now here it becomes overbought. So here, this is where things become more interesting. Remember, this is still a bearish order flow. Okay, so I'm gonna get rid of this one more time. We're just gonna keep going through this, make it simple on how to trade a bearish trend. You literally just use Fibonacci, liquidity, fair value gap, and RSI. 4 concepts, very simple, right? So here is the same thing. Here you have a lower high and then you have a confirmed low. So what do? What you could do is you could drag this from here to here. So you have a high and then you have a low, confirm high and low, right? So now what does that mean? Now you have an area where you can try to go short. So this is the premium right here. Now I'm actually going to use this high over here, just because if you notice, if you look at the price, it went down and it had a pullback and then continue lower. So this high is also valid to use for the Fibonacci. Okay, so anywhere from here to here is a valid premium. Okay, what's nice about this is that you also have a gap inside this one. So ideally you want to be shorting here. Now if we look at the reaction, the 15 minutes 1 hour is already overbought, so this likely would get rejected already. Okay, and we can see right here, this is real time. We can see that we rejected from this premium. We didn't even fill in this gap, so if you look at it, we still have a gap right here. Okay, we still have a gap. I can't even change color. Okay, so we still have a gap inside the premium, so this hasn't been filled, so the price will likely come back here. And just reference, this high right here is going to be your external liquidity. Okay, so I'm gonna delete this because obviously we're already in real time. So right here we're already disrespecting this area of liquidity, we're disrespecting this gap and everything else. So I already expected price to go lower. So one, this is another breakup structure. If we close below this, this will be another breakup structure, and in this case we could even expect price to go much lower. So right here, this is your demand, this is where people are buying, and since a lot of people are buying here, there's going to be some demand here, but their stop losses are slightly below it, and there's a gap right here. So this might be an area people are interested in, and likely even over here. So I'll definitely set alerts in this box right here if I was looking at price, right? So remember, this area right here is where people were buying, right? Every time it went down here, people were buying. Okay, so do not be surprised if we sweep below this low and come back to here, to this gap. Okay, in this case, what's a very possible scenario if we come to this area and we see a strong reaction is that price could actually come here and fill in this gap. That's very possible. That's why we have to watch for a reaction. This is the ideal area we want to be focusing on. If we go any lower, I mean, you might maybe see this level. So anywhere from this range right here, I would definitely be focusing on. Right now we're still here, so we're not looking at this, but we're waiting for it. So what am I doing? I'm going to add an alert into my box. Right, I'm going to add some alerts a little higher and just wait for it. Okay, and that's the only thing you can do. So you short these, and I just showed you how to short this, and I showed you why it keeps going lower. Because here you have high, lower high, lower high, lower high. Right here you have low, lower low, and right here you have another lower low. Pretty simple, right? So the reason why, now a lot of people are going to be going long here. Look, if you're going to go long here, that's totally fine. Just understand that your take profit is not going to be all the way up here or here or here, because you've already broken structure. So you are going to be trying to or you're going to take profits at the premium zone. That's only if you're going to go long. But if you're trying to go short and you're only trying to go short because you're trying to go with the order flow and not against it, then you're going to short the premium, right? That's pretty simple. So hopefully that makes sense. So if you're wondering why I knew price would go much lower, is because look at this reaction. We can't even, one, we're staircasing up to the premium and we're getting rejected right here, right? We're getting rejected right here at a resistance which used to be a previous support level. So this is basic. So if you apply this onto any other chart, let's say PITH, I know I'm making this video right now. So if we look at this, this is the same exact thing. It looks like PITH can't even break out of this resistance box, you know? So to me, if you look at this, it looks like we can't even break above the 0.5. This does not tell me that we are trying to go here or here or here, right? I know there's a gap here, but it's very possible. So I'll just go through this briefly. Let's assume that this was accumulation. If you know anything about AMD, let's just make the assumption this is accumulation. Okay. Now I'm not sure if it is because there's no confirmations yet. Okay. If this was accumulation, it's very possible that you will have a manipulation. Okay. Now I'm not sure how big of a manipulation you'll get, but let's just assume that's what's happening in real time. After that, once you get manipulation, you get distribution. And I can't even spell. Alright, cool. So that's ideally what that looks like. If this is happening in real time, I'm not sure. You would have to look back. I haven't done the chart. But you can definitely put a box right here. And right, so if not here, then you know, definitely look below this low. Anything below this low, I think, is, you have to see some buyers here. If we just blow by this, it's pretty crazy. So look between here and here, and yeah, hopefully that helps you. Yeah, also this is some good stuff right here. I don't know if I still have it. Oh, I must have deleted it. Never mind. All right, that's cool.